Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to talk about Li Auto, so ticker symbol Li, which is another Chinese electric vehicle stock which is going crazy as you can see. Today a gap between 20% and now it's retracing a little bit. The market cap at the moment is $32 billion. So as everyone looks crazy about these kind of stocks, I'm gonna try to do a more reasonable valuation with real numbers so you can have an idea on where these kind of companies can go. The only thing I ask you guys as always is to leave me a like. An early like, it's very important for the channel and the video itself. You're gonna help me to reach more people and I will be very thankful with you about it. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so Li Auto, as we can see from here, the gap today has been quite huge after the earnings. We have around a 20% gap. Is open at a 22% gap, which is crazy, and now it is retracing a little bit around $37 per share. So what do we do now? It's time to buy, it's time to sell. Well, let's see. Now, if you are on YouTube during those days, these kind of stocks are just going crazy. Everyone is posting videos about it. And I can explain you why. Because everyone is crazy about these stocks, so if you do a video about this, you get views, and YouTubers get paid. They don't really care about what they say. Some of them are doing reasonable videos, but some of them are just saying incredible stuff. So something that doesn't exist in the planet Earth. So the reason why I'm doing these videos is not because I'm the hype guy who like to do hype on stocks. It's because if you have been following my channel, I like to let you see real numbers. And because people can get hurt with these kind of stocks, this kind of hype. In my opinion, it is pointless to say that stocks like that can go tomorrow to $400 per share. It is absolutely idiotic. So I want to avoid people get in the FOMO mode and just make silly mistakes. So in order to avoid that, let's take a look. So first of all, guys, to have an idea on the kind of price targets and valuation, the fair price today of the stock, we have to, first of all, trying to estimate deliveries. So in 2020, we have that Li Auto has delivered, as of today, 18,160 cars, which are basically the Li 1, which costs around $60,000. Now, by 2022, the car maker, so Li Auto, is planning to develop and sell another vehicle, which will be called, I think, the Li 2, so Li's second model or something like that. So by 2022, probably they will start to sell that vehicle in the third quarter of 2022. So with that being said, let's try to estimate deliveries. So first of all, by 2021, Li Auto is planning to pump up the production up to 5,000 cars per month. So that would mean that in 2021 they will be able to deliver 60,000 cars. And since then we go to 2022 with the new model, 2023, 2024. Now these numbers here are quite optimistic, okay, because you can see 70% growth in 1 year. Now we have to think that, okay, it's brilliant, electric vehicles and all this kind of stuff, but you have the physical capabilities of human to build factories. It's something to consider. We cannot say that they will deliver 3 million vehicles by 2023 because it's absolutely idiotic. The human cannot build something like that in just 3 years. Okay, they are Chinese and we know that they build things quickly. However, guys, we have to remain real. And so This, in my opinion, is still optimistic, but it is something that we can achieve. Now, I told in the previous video that for NIO, I said 500,000 vehicles by 2024. Considering Li Auto, which is a little bit back in time compared with NIO, I am saying that they will be able to deliver 214,000 vehicles, okay, by 2024. So here you can see graphically it's a very steep high growth. It's something very, very great if they're able to do it. So from 28,160 in 2020 to 2024 with 214,000. So the model is based on these kind of deliveries. So now let's start. The first one, guys, this is the speculative one. This is a model to understand what the market is pricing. And today the market is not pricing the quality of the company, the business of the company, and the capabilities of those companies to achieve some results. Today, the market is just pricing innovation. It's just pricing the idea that this will be the future. So everyone says that, and no one is actually looking at the company itself. So if they are able to do that for real, and the margins of the car makers company, which are very, very, very low, no one is telling you those things today. Everyone is telling, oh, that's the future. So this is a very speculative model. I'm going to show you later on the other one with the net margins. So we start with the cost per vehicle, as always. As of now, $60,000. However, this is 2024. So as always, I presume, as Tesla did, that these kind of companies, they release very high price vehicles at the beginning to show their potential, and then they go down in prices, as Tesla did. As in my opinion, they will do exactly the same. So 2024 average cost per vehicle, I said two scenarios. The first one 50,000, the second one 46K. And here is what we have. You just take these prices, you multiply by 214,000 deliveries, and you have the total net revenue. Now, at the moment, it looks like that the crazy market is pricing these kind of companies at around 6 or 7 price to sales ratio. Now, to make you understand something, normal car makers, this price to sell ratio here is sometimes below 1. If you look at the biggest one, Toyota, all these kind of things, it is below 1. So just to make you understand, and not come and say that, oh, but Li Auto is not just a car maker. Well, that's not true. It's a car maker. That's their business. They sell the cars. It's not like, probably the only one that can be considered as more of a tech stock is Tesla, because of their energy business and all this kind of stuff and all these kind of ideas that Elon Musk continues to bring to the business, and also because it is the first one ever. But all these kind of things, guys, one day you will realize that they will be priced as just automakers and not tech companies, okay? So bear in mind that this is just hype. Once the hype is gone, just close your eyes and think, will these electric vehicles car maker be priced the same, so with the same hype and enthusiasm in 4 or 5 years time? In my opinion, absolutely not. So anyway, let's see what we have. This is the market cap. So you just take total revenue, multiply by what the market is paying today for these kind of companies, and you have 64 billions in market cap and 59 billions with these other prices. So shares outstanding, they are increasing and increasing. So right now they are around 630 million. I said 700 millions because they don't make not even a single dollar in profit. So they have to raise capital with the time, and they will increase shares as always with dilution. That's what they do. So by 2024, I said these kind of shares. Now, the share price in 2024, considering the speculative scenario, will be, in this case, with the 50K cost per vehicle, $91.8. Well, that's great because the stock is now trading at around $35. However, let's now take a look at a more realistic valuation. And when it comes to realistic, it comes to actually make money. And that's the realistic part of the business. Okay, not just the hype, but I want to see money at the end. That's the meaning of the business itself. So let's see, cost per vehicle. This time I took an average of the previous two. So $54,000 average cost per vehicle. As always, we multiply that by the same 214,000 that we saw before by 2024 in deliveries. And we have, once again, the total revenue. So $11.5 billion in revenue. Now, gross margin, it is a new company. So I said probably somehow they will be able to do 20%. Now, bear in mind, this is very optimistic. This is so far away from where they are now. So bear in mind that. Gross profit, you just take the 20% of this and you have 2.3 billions. Research and development and management expenses and all this kind of stuff, 16%, which is reasonable for a company, for a car maker. So you just take the 16% of this. And that's what you have, 1.85 billions. That's what you're left with. So operating income, you just take this minus this, and you have 463 billions, so around, okay? Then you have taxes, and as I said with NEO, we had the Chinese average corporate tax is 25%, but the Chinese government is pushing through EVs and innovation by, let's say, easing the tax burden on these kind of companies. So I said, let's put 18%. You just tax these things, and the net income is $379 million. So when you take the net margin, you have that Li Auto, in this case, is profitable by 2024, and the net margin is 3.28%. And this is a very realistic scenario if you see how the car business works. So go to check other car makers and you will realize that the net margins are very near to this. So once again, the same 700 million shares outstanding, you have 0.58 as an earnings per share. And now let's say that the market will continue to price these kind of companies as a tech companies, okay? So the PE ratio, instead of just 8, 9 as normal car makers, I just put from 35 to 70, which are the PE ratios of tech companies. So you will have that the price in 2024 is this one. In 2024, guys, not today, in 2024. So you have as a 35 PE ratio, a price of 20.35 in 2024, up to the most speculative one, 70 PE ratio, a price of $40.7. So when we discount those things back today, 9% discount rate, that's what you have. Those are the fair prices today. So with the 35 PE ratio, $14 per share today. And then up to the most speculative one, 70, you have $28 per share today. So this is a more realistic, this is a model without the hype, okay? This is the real world, and this is the hype. This is how the market is pricing things today, but I will not be surprised and indeed to see prices coming down. Be very careful, this is how the hype is pricing these kind of companies. But I did the same valuation on NEO, so if you haven't seen yet, go to check it out. I did the same stuff. I'm more speculative, so what the market is pricing, and then a more reasonable model. So these are my prices, guys. And remember one thing, what those guys here, they don't tell you is that the risk behind these stocks is very, very high. They are speculative bets, and those guys, they just don't care, because look, they make views, they make a lot of views, and they get paid, and then they say, well, you know what, I was wrong, and nobody cares. And but what I'm worried about is that a lot of people are continuing to put a lot of money in those companies, and eventually they risk a lot. They're risking very much, and they don't realize it. They don't realize it. It's not something smart to say that some kind of companies, they will do to $1,000 per share by December, because it's just something crazy, okay? And I see some comments like this one, which, guys, I mean, this is very crazy, okay? So this is why I do these kind of videos. I hope you will have a more reasonable expectation now. So that's it, guys. That's the end of the video. Leave me a like if you find this video interesting, and leave me a comment below. Tell me, what do you think? Will the market continue to price those things as crazy, or at some point they will realize that probably is too much? So just write me down below and tell me, what do you think? Subscribe to the channel if you want, and as always, guys, have a wonderful day.